8%, and 24-25 we stand at $480 billion. It's huge. And housing, known as the GDP, which is the indicator of the growth of an economy, was 0.7% in 1986. Now we are at 11.2%, almost crossing 12% in the next 2 years. The housing finance in India, we have housing finance companies, scheduled commercial bank, private sector bank, and public sector bank. They are the major player and they do the housing finance. The market share of all PLIs, we call them PLIs because they are prime lending agency, and we give them refinance. We get them refinance depending on their size. The housing finance company is constituted 76 billion, not much, could be 20% of the total market. Public sector bank, which is largely state-run bank, and which has more branches and more distribution, they constituted about close to 186.17 billion. Private sector bank, which is not owned by the state, they constitute even close to 147. And the regional rural bank, India given its size, we have a regional rural bank. Each state has a regional rural bank. The responsibility of the rural bank is to improve and include propagate and propose the financial inclusion. So that is the job, to promote financial inclusion. We have regional rural bank. And the Government of India's Affordable Housing Flagship Program, this is how it all started in 2009. Because we were finding it difficult to get people to come and promote, though we had some DFIs from the AFD, KFW, IFC, World Bank, they all came and supported.
That we delivered. And this was only for the urban customer. And 10 million was for the rural customers also. Because 48% to 52% of the India stays in tier 2, 3, tier 4 cities and villages. Then after the government came back again in power, they promoted again this Pradhan Mantri Awas Yojana 2, it is continuing. Again the target is to deliver 1 million house, 2 million house every year, and 10 million in next 5 years, because the government term is 5 years in our country. So largely the subsidies and everything came. I will talk about it, how it came. But these numbers and website this presentation will be available on website, so you can take it from there. And the statement which our Prime Minister said, the home brings dignity and enhanced ability to the home, because it brings you the sense of safety. So this was the prime statement, and we all are working towards it, including all the government machinery, private sector, and all the DFIs in the bank. And National Housing Bank, we are the central nodal agency. We not only provide the housing finance, but we're the subsidy of the government, which constitute only 15% of the total debt, also is disbursed by us. So we have disbursed a subsidy of $1.9 million to 18 PLIs and 4,500, because the recent program started very recently, the PMAY 2. These are some units of PMAY, and where this is how if you see below the photograph, the adjacent housing is the kacha housing, and next to that is a concrete housing which we are promoting. So government programs only can give you subsidy, can give you release the land, but how to make housing affordable? Making land available for affordable housing, that's the job of the government, but government can't give it 100% because they also have a budgetary constraint. Regulation of real estate sector to ensure timely delivery, because in India, earlier the builder projects used to take 5-year to 8-year kind of timeline, and before going to submit a project, you need 44 approval before you put the first brick on the ground. And the reduction of the cost of funds through blending. Making land available, we started doing cross-subsidization. The builder was asked to construct a house for affordable segment, and he was given a higher FSI. FSI is the floor space index, which a builder can construct more for the upper income segment. A prescribed portion of the land, when the government allotted land, they said 30% of land is for the affordable segment, 20% is for commercial, rest 50% of middle income group and higher income group. So affordable housing price was also determined by the government at which rate it will sold, but it was not a very viable proposition for the builder. So they were cross-subsidized.
But for higher income group, they were given higher FSI of 3 or 4 just to cross-subsidize. Then we set up Real Estate Regulatory Authority, that's a one-stop authority, which does mandatory project registration, high level, and the builder goes and submit and gives the date of completion of the project. And if he is not able to complete, he has to pay penalty to the government as well as to the LRD also. Then this agency monitors the periodic project progress update, the standardization of carpet area calculation, because this was a very vague subject earlier. They were including the outside space also as for FSI calculation. And it has a grievance redressal mechanism system. In case if you are not able to complete, if your problem is not addressed by the developer, you can approach the authority. Now affordability through builder rights. We get subsidized fund, we raise money from the market, all that is put together comes to NHB study. Then we give to PLI, the primary lending institution, for affordable home loan. NHB provides funds at low cost to the primary lending institution for onward lending. We have an interest rate cap also of 300 to 350 basis points. There when we lend money to PLIs, they are supposed to only do onward lending at 300 basis points. Government of India provides subsidized funds budgetary allocation, but that is only to the extent of 10 to 18%. And we do subsidize, we get money from the government at subsidized rate, we do blending and do onward lending. Currently the rate of interest on which we provide money to our housing finance institution is about 7.5%. And to affordable segment is funded at 10 to 11%. And concessional funding, we have further categorized, like economic weaker section, we give 100 basis points further. NHB fund we do raise tax-free bond and the capital gain bond. The cost of that is around close to 4.5 to 5%, and that we use for lending it for the lending onwards. Recently, we have started
Check.
MFIs, individual loan size varied from $1,700 to $2,000. The tenor also varied 3 years. These MFIs take the primary responsibility through the joint liability group, which they create, where 5-7 women they take loan and they ensure the timely repayment. And this is just also we are hosting Asia Pacific Union Housing Finance Conference I invite all of you to that. This will be available on our website and there will be Asia to coordinate. So this is what I had. I finished much in time because not much to talk about, but the numbers are fascinating. Oh, I can give you that. No, I heard 1 o'clock and especially by the...
No, you're right, but there is a question.
Yeah, please, I'm more than happy.
Thank you so much for the presentation. 2 questions for our Kenya. One, is the land given at a lower cost or is it given free? Like, how do you think about the land contribution of the government? 2, in terms of the subsidized interest rates given to the buyers, like, how deep is the subsidy and how do you think about it? Because our concern is if we have very, very deep subsidies, we will not be able to afford them in the long term. So do you have step downs, etc.? How are you getting the private sector banks to come in to support the offtake? So quite a lot. Thank you.
Okay, so on the land, like you have county here in Kenya, we have a state government. And we have municipal corporation, which is a quasi-government body. Then the land is a state subject in India, so it is not given free. It is given at a concessional rate. One piece, larger piece of land is allocated. The builder is asked to cross-subsidize. Government gives land at 10% lower than what is the market price. And the builder, by getting higher FSI on urban, in a commercial center, where he can construct more carpet area, he cross-subsidizes that. And in terms of interest rate subsidy, see, in India, the subsidy is only 3% of interest rate. And affordable segment borrows money at about 13 to 14%. And currently in India, we have 8 housing finance companies which are listed on a stock exchange. They are backed by TPG, Warburg Pincus, Blackstone, and the who's who of the world. And so the cross subsidy which is coming to these people is not in the form of 10% or 5%. It's only 3%, but we have promoted the habit of saving towards the housing by having a housing deposit scheme. So that provides at least the seed capital, which is required 10 to 20% of the amount from their side. But state has only given the facility infrastructure they build around that area. And recently the connectivity also has improved a lot. So all the slum dwellers, they have moved, if you're familiar with Bombay, we don't have any affordable housing project within the Bombay. This is outside the vicinity, which is about close to 40 kilometers from Bombay. But they have a metro, they have a local train. So I have a cab driver who drives within the Bombay municipality. He parks his car and leaves for his home at night, 11 o'clock. So there also government has come up with various schemes, but we kept in mind that it cannot be completely supported by the budget. It has to, people will have to pay the price, could be subsidized at the rate of 10%. 10% of the total cost. So with this 3% subsidy which comes in the form of interest, over a tenure of 15%, at 15 years, if you see the total money which the government subsidizes at 10% of the overall cost for a period of 10 years. And which is reasonable, which any government would do. And see, today we have seen so many, today we deliver about close to 3.4 million houses every year, putting urban and rural area put together. But that has given impetus to cement sector, other sector, but GDP has gone up just because of the growth in the housing sector, largely. Any other question?
I think we'll stop there. We'll have them at lunch. But
Sure.
thank you so much.
Sure.